Hey there, Tim from Alpha Wolf Trading, wanting to thank you for stopping by to watch this interview and also make it clear to you that this is not a paid for promotion. I collect no compensation for the interviews I do here. These companies have been identified as opportunities for investment that could provide an above average return on our investment. This is our opportunity to get to know management, to understand the vision for the company, the strategy they plan to implement, and execute to achieve that vision for the company. So if you learn anything here today and you enjoyed the interview, please do us a favor and subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview, and I'm excited about this one because I think it's a very compelling story, changing an industry, and I think changing an industry for the better. Been a lot of speculation that the independent real estate agent is gonna go away. I remember hearing that back when. What is Zillow? And I mean, everybody in they're going to go away. There's no need for a realtor. Well, they're still here. And I think that they will always be here. But this is it's an interesting twist on the whole real estate market. And I am very happy to have Tamir, and I'm sorry, last name, how do I pronounce it? Poleg? Poleg. Okay. So Tamir Poleg, and it's now it's the Real Brokerage, right?
Yes. Yeah.
But then I saw you've got this cool little which is just real, right?
Yeah.
But it's kind of twisted up a little bit, right?
Right. Yeah. We're known in the industry as Real.
It's real. Okay.
Yeah.
But it's not the Real Brokerage. This is real.
Real. Yeah.
All right.
And
Ticker symbol is REAX, and that's on the CSE and the NASDAQ, right?
On TSX and NASDAQ.
TSX. Okay. Got it.
Canada.
I got to change that. I put CSE. I'll change that. Doesn't matter. So it's the same symbol on both. REAX, right?
Correct. Yes.
All right. So tell me about this brilliant idea that you had, how you came up with it, and give me a little bit of history on yourself and how you got here. Tamir, first, thanks for coming in and tell your story.
Sure. Thanks for having me. Thanks for the opportunity. I'm excited to be here. And very quickly about myself, I've spent my entire career working for either real estate companies or technology companies. So I actually started as a construction worker and then got a degree in economics and then joined a startup in the year 2000. So, talking about bubble bursting, I've been there in 2000, and in 2008, I was in real estate, and now I'm in real estate. So I've seen markets, going in the opposite directions. But 2000, I joined a startup in a sales position, been with two different tech companies between 2000 and 2005. And in 2006, I started my own company in Houston, Texas, just at the beginning flipping homes and then going heavily into multifamily investments when the market tanked around 2008 and 9. So ended up owning a bunch of multifamily properties in a construction company, ended up selling that in 2013. And at that point, I knew that I wanted to stay in real estate because I'm extremely passionate about this industry, but at the same time, I also couldn't figure out why is it that real estate is so pushing back on innovation? Why is it so slow moving, so archaic sometimes? And I knew that I wanted to do something with technology in the real estate space. And one day I looked into the real estate brokerage industry and I saw a few things that I just could not ignore. First of all, there are 1.5 million agents in this country, and they generate roughly $100 billion in annual revenue for brokerages. So this is a large market. It's dominated by pretty much the same players for many decades. You know all of them. Century 21, REMAX, Coldwell Bankers, all of those folks have been around for anywhere between 30 to 100 years. All of them operate in the same way. All of them rely on offices for distribution of services. All of them do things manually. All of them offer agents, let's say, questionable value. And I thought that they were charging agents too much. So going back to 2013, 2014, I felt that there's an opportunity of creating a brokerage that provides more value to agents through technology and at a lower cost. And at the same time, I also thought that as long as consumers want to pay less for real estate services, the traditional brokerage model, whereas you pay so much money on rents and overhead and manual labor, at some point in time, will just go underwater. So how can we create a brokerage that's sustainable? Because I believe that agents are here to stay. I believe that as long as it's humans that are buying homes, they should be serviced and they should have a human assisting them in this very complicated, highly emotional transaction. So how can we keep agents in the game? How can we keep brokerages in the game? How can we create a sustainable operating model for a brokerage? And that's how we started Real in 2014. Fast forward to today, we're licensed in 44 states in the US and in 3 provinces in Canada, and we have over 7,000 agents working with us exclusively. An agent can only work with one brokerage. So we are one of the top 20, top 15 brokerages in the country right now. As you said, we're publicly traded. We raised about $64 million to date from some of the most notable investors in the world. And we are the fastest growing company in our field by far. So just to give you a sense of what it means, we ended up 2021 with 635% revenue growth. And we ended last quarter, the third quarter of 2022, which was a challenging quarter for real estate. I mean, all of our peers reported declining revenue. We grew revenue by 188%. So we're on this amazing trajectory right now, and it seems like our story resonates with a lot of agents. And yeah, that's us in a nutshell.
So what's interesting about that is if you were to look at the stock, you would be not reflecting any of what you just said, right?
Yes, and you know, thank you for highlighting the pain. But I think that what happened in the past year is investors at the beginning, they started to shy away from high growth tech companies, which is what we are. And then a few months later, they started disliking anything real estate related. So we are on that intersection
Double whammy.
of real estate and high growth tech. So like everybody else, we're getting pounded. But you know, if you look at all of the companies in the space, from Zillow to Open Door to Redfin, everyone's down 60 to 90%, and there's no exception.
We're gonna go over the chart. I usually save that to the end, but there are actually some things that your chart is. I mean, look, you just said it. I mean, there are a lot of charts out there that look a hell of a lot worse, right? And I'm not just talking in the real estate industry. I'm talking across the board, right?
Right.
Especially
Right.
smaller unknown companies, right? I mean, it's not, I don't feel as though you're probably as well known in the investment world as you should be, right? I don't think your story is being told as much as it needs to be, right?
Right.
But it is a fascinating, I mean, the fact that you just threw out that statistic when everybody else is hurting, that's interesting. You must be doing something right.
I think we managed to figure out an amazing balance between value and cost for real estate agents. So we offer a lot of value at what agents would, I mean, we charge agents typically half of what they would be paying for at a traditional brokerage.
And that's for them to hang their license in your office, pretty much, right?
I mean, it's so much more than that, because we developed a tech platform for them to deal with everything they do.
No. For the standard real estate broker,
yes.
it's to hang their license in their office.
For most agents, all they do, or all they need from their brokers, is just, you know, the permission to work under that broker's license. And unfortunately, a lot of brokers do not provide much more than that.
Right.
Yeah.
That was the point. And they cost double what you charge.
Exactly. Yeah.
Okay. I just wanted to make that point. Go ahead. Sorry.
Where were we?
You
Oh,
were
so
saying,
I was talking about the tech platform. So we invested millions and millions of dollars at understanding what agents go through every day, and then coming up with a mobile focused platform for them to grow their businesses on. Because we see agents as small businesses. At the end of the day, if you're a real estate agent, you have a lot of needs, from marketing to customer service to accounting to a dashboard to training, compliance, legal, you name it. And you need everything. So how can we deliver that to you in a way that will be easy to use, will cover everything that you need, and will also be very cost effective? So we spent years understanding what agents go through, understanding how transactions are handled and processed in different jurisdictions, and just build the platform for that. So our technology is focused on four main pillars. One is productivity, everything that helps agents save time and make more money. From the very basic, CRM to a dashboard to 24/7 support to a transaction management tool, everything that agents need. And then marketing, offline and online, if you needed to order
do
business
they keep
cards.
their brand, or do they fall under the Real brand?
This is one other thing which is great about us. We, unlike many other brands, we offer agents complete freedom and flexibility to build their businesses the way they want to. So as long as they're compliant, they can brand themselves Tim Realty Group, powered by Real. And I mean, we don't care. It's your business.
So you're white labeling essentially their business, right?
We're a platform. Again, we're a platform. So, I mean, what's behind it is the fact that 20 years ago, people might have walked the street and went into a REMAX office and said, hey, I need an agent, because they thought that REMAX had great agents, and that's how you would pick your agent. But today, people do not care about the brokerage affiliation. People choose agents based on other things, based on the fact that they know that that person is an expert in their area, or they were referred to that person by a friend who bought a home, or they got a lot of marketing materials, or they follow that agent on social media and they like what they do. They don't care about their brokerage. So we understood that, and we said, okay, how can we help our agents brand themselves within their communities, both offline and online, which I believe is a much better use of our marketing dollars.
Well, it's almost like you're acquiring a business
Without paying for it. Yeah.
Yeah. Right.
Yeah. 100%. Yeah. I mean, some companies in our field, by the way, have spent hundreds of millions of dollars in acquiring market share. We are spending exactly zero in acquisition of agents. So agents join us based on word of mouth. I think that our paid marketing budget is around $2,000 a month. It's that low.
It doesn't, if you're an independent real estate agent, I mean, this is just me thinking out loud. I just listened to you rattle off a whole bunch of things that I probably don't want to really deal with as a realtor. I want to be out there selling homes, right?
Right.
That's what I want to do. Get me as many walkthroughs as possible, right? I mean, that's what I want to do. I want to sell houses. I don't want to do the accounting. I don't want to do the marketing. I don't want to do all that stuff, right?
And I'll add something on top of that. You're also looking for an opportunity, because you're driven by your desire to help people, but you're also driven by money. So what if there was an amazing opportunity out there that allows you to keep more money in your pocket out of the existing transactions that you close, but on top of that adds additional opportunities, such as owning equity in the company you helped build? And this is why we went public.
I'm glad you brought that up. Which company would that be?
Us.
Your company?
Yeah.
Oh, they get equity?
Yeah. So the reason why we went public in the first place, and we were a very small company back then, we were making $10 million in annual revenue. Right now, last quarter, we did 111 million. Just for you to understand where we went from in about 2.5 years. But the reason why we went public is because we believe that agents are partners in building this business, and as such, they need to own equity in the company they help build. So we wanted to create a very compelling equity program for agents that incentivizes them and rewards them for their contribution in growing Real. And when agents think about all of the alternatives, they can say, okay, I can go to Joe Realty and help that dude build their business. And whenever I leave. That's it. That guy still builds a business for themselves, their reputation and everything. But I can also join Real and start accumulating equity, which one day may become very meaningful for myself.
And then be part of something bigger than themselves.
Exactly.
Right.
Exactly. And do it alongside people that are, in many cases, I mean, we've attracted some big names in the industry. And what's unique about it is the fact that all of those high-performing agents and high-profile agents are just willing to share and contribute. So when you join Real, you all of a sudden have access to people that you've looked up to for many years. Some of them might be in your market. And this is what's driving that snowball of agent attraction, because once you attract one or two high-profile agents in a certain market, all of a sudden everybody starts asking themselves, okay, why has that person switched to Real? Maybe I should figure it out and ask what is it about. It's kind of it's a beast that feeds itself in many ways in terms of growth.
And why wouldn't it? I mean, if you're pretty savvy, right? And especially if you're just starting out, I mean, they've got to pay to have, they may have office space, they may not have office space. I don't know how that works, but they're paying to hang their license, and they're paying to have maybe some office space, right?
Yeah.
And that's about it. I mean,
I mean, sometimes they do get support from their brokers. This industry is very weird in the fact that if you're a broker and you own a brokerage, very often you're competing with your agents. So you are also selling real estate, but your agents are selling real estate, and you might be competing with them over the same listing, which doesn't make any sense.
No.
I mean, in our case, we don't compete with our agents. This is a full alignment in interest.
So is there a merit system to get in the shares? I mean, is there a duration of time, performance, or?
Agents can earn equity in a couple of ways. One is by reaching production milestone. So when they close $80,000 a year in commissions, they get a small equity grant. When they attract a friend and that friend closes their first deal, they get a small equity grant. All of those grants are vesting over 3 years. And then agents can also use a percentage of their commission revenue to actually purchase company shares. And if they stay with us for 12 months after that closing, they get a bonus after 12 months. So that's a retention mechanism for us. But for them, it's they buy shares and then they get bonus shares on top of it, which is great.
What is your churn rate on when you get somebody come over? What's the churn?
So we are operating in a high churn industry. Typically, agents switch brokerages every 2.5 years. And I think that what's more meaningful is revenue churn, because sometimes agents will come in, will go out, they haven't produced anything, they didn't have any meaningful impact on revenue. And those are probably the agents that you don't really care if they're leaving, because they just came in to do nothing. And it happens every now and then. So our revenue churn is last quarter was 2.5%, which is extremely, extremely low. On an annualized basis, it's 10%. And again, agents switch brokerages every 2.5 years. So it's very low. Honestly, I don't know if that's sustainable, if we can continue to operate this way. I think that this is a testament of the attraction in our revenue share and equity programs, and on top of that, the core basic offering of what we offer. I think that when agents look outside and thinking, okay, are there any attractive alternatives for me as an agent out there? They would probably not find any or anything that would be as attractive. This is why it's so low.
So let me ask you, so you provide all this stuff. You talked about technology, you talked about, are there different levels or tiers to how much help you can provide? I mean, is it like, we start out with the basic package, but if you want this, it's gonna be another package, and if you want that, it's gonna be another package.
We don't really do that. So we're trying to provide the best service to all type of agents. So if you're an agent that closes 4 transactions a year, or you're an agent that closes 40 transactions a year, you're getting the best possible service. Now, there is a structure called teams in our industry. Teams are a group of agents working together and somewhat independently. So it's like a brokerage inside a brokerage. Sometimes they have their own systems, they have their own admin staff, they have their own lead gen and everything. And we know how to cater to teams very well. So we've been attracting some very high producing teams. So I think that going back to your question, there's no paid tiered support. We do have a way to prioritize, let's say, support tickets internally. But again, we strive to provide the best possible service to all agents.
So it really kind of sounds like a win, win, and then win for everybody, right? Would you say the customer gets better service?
I think that working with our agents mean that they have what they need in order to be able to respond faster, to have more time, because we are saving a lot of time for them, to have a more streamlined transaction. But I also think that there's a tremendous opportunity in completely reimagining the home buying process or journey through a combination. You started the conversation by saying that agents are here to stay, and I fully agree. But at the same time, we cannot ignore the fact that technology can create experiences. And I think that there isn't a single company in the real estate world that's managed to create a different kind of home buying experience using technology. Like if you buy a home today or if you bought a home 10 years ago, it's pretty much the same process. So I think that there's an opportunity to take that human element and take that tech element, combine the two, and just create an end-to-end solution or experience that
more streamlined, more efficient, more
convenient, transparent, quicker, more control to the buyer. I mean, I'm amazed by the fact that when you go and buy a home, you pretty much do not control anything. Your lender controls everything. Like you do not control when closing occurs. You don't even control whether you will be able to close. Like the fact that you have no certainty that you're going to own this home until you actually sit at the closing table doesn't make sense to me. And what we're building right now is that differentiated home buying experience using the technology that we're developing that will incorporate brokerage services, mortgage services, title services, and insurance, again, into an end-to-end solution. But for me, that's the future of real estate.
And I think you're accurate. And we talked about it before we hopped on. The reason I think that, especially for first-time home buyers, when I just reflect back on my own experience, I was a nervous wreck when I was buying my first home because it was a big commitment, right? And you don't know what's going to happen. You're putting out a lot of money, which seems like an awful lot of money. You just don't know what's going to happen, right? And then you have this whole responsibility of taking care of the home. And I mean, it's just a nerve-wracking deal. So having I reflect back to having the broker, saying things that made me feel better, whether it was true or not, didn't really matter to me because it just made it feel better. It was an easier pill to swallow, right?
And this whole thing doesn't make sense. I mean, all of the surveys show that for the average American, buying a home is one of 5 most traumatic life events, together with death in the family or losing your job. It doesn't make sense that you spend so much money, you spend all your money and all of the money that you don't have on something that ends up being traumatic. Like you spend $2,000 on vacation and you get a great outcome. So
Right.
it doesn't make sense that you invest everything that you own and have a poor outcome. So I think that this needs to be changed, and I think that we will be the company that's going to change it.
Yeah, I would say this. I don't think that you're going away. I think some of the other guys at some point might go away, or shrink dramatically, right? Because I think that technology, look, you're not going to stop technology, right? It's going to continue. And if you look at adoption is slow, though, I will say that, right? It always takes longer than you think. I don't care how cool it is or what it always takes longer than you think it's going to, because people are just creatures of habit, right? And that's why the real estate agent is still here, is because of that adaption. Go ahead.
I fully agree on the adoption, but we also have to understand why is adoption so slow, especially in real estate. I think that this industry is so fragmented and so highly regulated, and that it just delayed innovation in many ways. And the fact that you're dependent on different stakeholders, again, the agents, the lender, the title company, the appraiser, the inspector. But I think that we're getting into a point now in the life cycle of innovation in the space where a critical mass of innovation is starting to form, and that will expedite the adoption and the rate of change. I think that this is actually coming to that point. So I think that the next 10 years are going to introduce much faster change compared to the last 10 years. But on a big picture, going back to what you said about agents not going anywhere and some players dying a slow death, it's already happening. If you look at some of the companies in our field that are publicly traded, and you look at a 10 years chart, you can very clearly see a slow death. And I'm not going to name some names, but it's very easy to find them. So what we're seeing now is $100 billion pie that's being redistributed. Now, maybe it's being redistributed a little bit slower than we thought, but it's already happening. Players like us are taking market share. The fact that we're growing so rapidly, it's at the expense of somebody else, and that somebody else is the traditional brokerages.
So in being that you're looking at streamlining the entire industry, it's not just, I mean, you're right now, your focus is realtors, right?
Yeah.
But you want to really change like the whole process, right? And so what does it take? What does it take to make that happen? I mean, where do you even start?
It's a good question, but let's start one step before that.
Okay.
Real estate is the single largest asset class in the world. We agree on that.
Yep.
Still, there isn't a single real estate tech company that's worth tens of billions of dollars. Like, there is no gorilla. It's very fragmented. And I think that if you're dealing with the single largest asset class in the world, there's an opportunity to create the most valuable real estate tech company in the world, a company that will be worth tens of millions of dollars, billions of dollars. And that company will really need to change the way people buy and sell homes using technology. Now, where do you start? I think that you first need to start with the understanding of, if you want to really change something, you need to control the entire process. You need to control the lending piece, you need to control the title, you need to control insurance, you need to control broker services as well. You need to be able to provide people an end-to-end solution. And it doesn't work with JVs, and it doesn't work if you rely on a partner or a third party kind of integration. You need to be able to own everything and think outside of the box and interview thousands of people and ask them what was not working well. You talked about your experience buying your first home. We've had thousands of conversations of this type, and we really try to listen and understand what wasn't working well and how can we change that. And I think that it's a series of things that at the end of the day you can envision a product and say, okay, I think that if we introduce that product to that person, they would have a very different experience from what they actually had. So that's where you start. This is how you build a product. It's easier said than done. We haven't launched that product yet. It's going to be launched in the first half of next year of 2023.
So you have so you have a product that you've been working on.
Yes, 100%. Earlier this year, we acquired a startup in the title space. So we own a title company right now. We announced an acquisition of a company in the mortgage space. So we have those building blocks. We acquired them, and now it's about adding a layer of experience on top of those building blocks.
And then do you have a big, I mean, I have to assume you're a software company, right? Software platform. I have to assume you have some pretty smart software engineers, right?
We do, and I'm happy you didn't ask about numbers. You asked about, brains, because sometimes you could have a team of 50 that operates better, or the output or the outcome is much more significant than having a team of 500. So I think that we have some of the brightest minds in the industry, honestly. And I think that it's not only the understanding of technology and what technology can do and coding best practices and everything. I think it's the understanding of real estate and the understanding of software within real estate. And that is something that's lacking in real estate, the understanding of real estate amongst tech people.
And just business flow in general, right? I mean,
that too. Yes.
Yeah. I mean, there's a whole bunch of pieces here, right? The whole process, if you haven't been through the process as a home buyer, I mean, you're right. I mean, let's talk about this environment right now with the Fed raising the rate 3/4 of a point every couple of months. Yeah. I mean, I remember stressing about where I was going to be able to lock in my rate, right? I mean, the whole process is nerve-wracking. I mean, and if you miss locking in where you want to lock in, I mean, that's significant dollars, right?
I mean, that over 30 years or 10 years can end up costing you tens of thousands of dollars.
Absolutely. And if you don't think that's nerve-wracking, it's nerve-wracking. I mean, you're trying to make sure you got that thing locked in, right?
Yeah.
And in this environment, holy crap, I can't even think. I don't even know what that would be like.
It's definitely a challenging time in real estate right now, which, by the way, also presents a lot of opportunities. But looking at October data, that home sales data that was released just a few days ago, it was the 9th consecutive month of declining revenue or declining transaction volume in the market. So if you look at cycles in real estate, typically they're about 18 months. So we might predict that we're closer to the end of the cycle than we are to the beginning of it. But I think that there's a lack of clarity right now, a lack of direction when it comes to the Feds and inflation and where rates are going. But I think that, especially in the public markets, stock market, I think that we are getting to a point where we are seeing opportunities. Definitely companies valued where it's becoming very attractive. And I think that—
Are you talking about companies within the public markets?
Yes.
Okay.
Yes. Yeah. 100%. And I think that, in the next 2, 3, 4 months, we will have more clarity as to where inflation is going and how the Fed is going to react moving forward. And once people get a little bit more clarity, also in the mortgage industry, we will see some easing of the tension. And I mean, we are fortunate to be in an industry where there will always be demand for what we're selling. Like people needed housing 1,000 years ago, people will need housing in 1,000 years from now. The question is, how are they going to buy? It's not about what. I mean, they will buy homes. It's about how.
Right. So this is such an interesting conversation because my belief is this, and I'm just going to give you an example of the Las Vegas market right now. So I have a friend of mine that's a broker, and I like to stay in touch with what's happening in the market, right? So it was only I don't know, maybe 4, 5, 6 months ago, we had, I think we had like 1,600 homes on the market, which is incredibly small, right?
Yeah.
You put a house, you put a sign up in my neighborhood, it was gone like 2 days. Right. Now, fast forward to where we're at now, and we jumped to 8,600 homes from 1,600 in short order. I mean, like, wow, holy crap! Now we got 8,600 homes. I just talked to him before I got on the phone, before we jumped on. That number actually decreased recently. Yeah. Now, my question was, why is that? Is that because people are selling the homes, or is that because people are pulling their homes off the market?
I mean, think about yourself as a homeowner thinking about selling now and buying a new home. Would you go buy a new home and pay a 7% interest rate? Probably not. It doesn't make sense. So, but going back to the market conditions, let's go back a year. Okay. A year ago, there was a shortage of inventory. It was extremely difficult for buyers. Everybody was wishing for the day that the market will be a little bit easier, that there will be a little bit more inventory, that homes will be sitting on the market for a little bit longer. And if you look at historic data, what's happening right now is actually perfectly in line with the normal, with the average. So everyone's panicking because we went from a crazy market to a normal market, but everybody's panicking. But a year ago, you were wishing for this day to arrive. So let's put things in perspective.
No, we can never do that, because and what's really funny is you actually, as a real estate guy, said that things in the market are looking interesting. And this is what I will share with you. This is a cycle that we go through all the time. So I remember when we've been especially small micro caps have been in a bear market for 15 months. Okay. Stocks, the breadth of the market, stocks were making 52-week lows while some of the big boys were hitting 52-week highs. Okay. Yeah. But that was an indication that there was weakness in the market in terms of breadth. You had some tent poles that were holding up the market, right? Right. The big boys. Now, when the big boys cracked, that's when you started seeing the real volatility. And that's when I started hearing people saying, yeah, I'm just going into real estate. And I'm like, looking at them going, you got to be one of the dumbest people. I mean, I'm thinking, this is not the time to jump into real estate, because what's coming next is real estate's going to get hit. It's the same cycle all the time, right? And now we are seeing that reset. Are we going to see what we saw in 2008? In my opinion, I don't think so. But maybe.
I don't think so either, because it's a very different type of downturn in the market. Very different. I don't see.
You said the word. It's more normalized.
I think that if you think about real estate long term, what's happening now is a completely healthy process of the market correcting itself, stabilizing, balancing itself out. This is exactly what you want markets to do.
And it's exactly what you want the stock market to do too, by the way.
Correct.
Right? Yeah. You want that resetting, that cleansing of the system, which we haven't had in 14 years up until this. I mean, we've had pullbacks, but not a long bear market where actually it's just continually a painful thing to open your account and look at every day, right? And it is, but that is also when the biggest value is created. And if you are finding the companies that are not going to be just survivors, but they're going to thrive when things turn, this is when real wealth is created, right? This is the time. And this is
100%.
when everybody is running for cover and doesn't even want to look at the market. But my belief is that, and you just said it, there are some very attractive valuations. So what do I think is the next step? I think you're going to see a pickup in mergers and acquisitions. Because if you're a small company that needs to raise capital in this market, you are not going to get a good deal.
Right.
You are going to get burned.
Yeah.
Okay.
If you even manage to.
If you can even manage to.
Yeah.
So what does that mean? That means you're not sleeping as the CEO of that company, whatever company it is, you're not sleeping at night because you need capital and there is an attractive deal out there, or maybe you can't get capital at all. So what do you do next? I would start thinking about who's my strongest competitor that is in a really good cash position that maybe it would make sense if we partner, right? Either that or I'm going to die. So, I think you're going to see a pickup in mergers and acquisitions.
I agree. And I mean, we are looking for opportunities. We are fortunate to have a lot of cash in the bank, much more than we
So
need
let's
to
talk
weather
about that. I'm glad you brought that up.
Yeah. So we have roughly $31 million in cash and investment securities. Last quarter, which was again a challenging quarter in real estate, we burned through $700,000. So and that'll probably decrease in the coming quarters, hopefully. So, we are now looking to grow market share, looking to acquire companies at a very attractive valuations.
And what's interesting is you're doing it in a very diversified way, because you just said you're in the mortgaging business. Now you're in the titling business.
Yeah. And we are looking into acquisitions in the tech space as well. Sometimes you would have great companies that build great products and they have great teams, and you might want to consider just to bring in that team or use some of that product. So we're starting, I think that we are the only tech company in that space, in the real estate space, that haven't laid off people.
Are you sleeping well at night?
I have a 3-month-old baby, so I'm not.
No, you're not.
But I've built this business in the past 8.5 years, and from an historic perspective, I think that I'm sleeping now much better than I slept 2 years ago, or 5 years ago, or 7 years ago. I think that we took a lot of cautious steps, and we came into that downturn in great shape. Great momentum, great balance sheet, extremely efficient, didn't need to lay off, didn't need to adjust. So I think that from that perspective, I'm sleeping well.
Your core team that you started building this with, I just talked to other CEOs, and a very common theme is, and at least for the ones that I think are successful, are the ones that recognize their team, right? And I just actually met with a turnaround guy that he's turned around 3 companies, and I asked him, how do you do it? And he does it. First, you gotta go backwards, and you gotta look at all the pieces, right? And then you gotta put together the right team. That was his first statement, right? You got the right team.
I'm extremely fortunate to have an amazing team. And looking back 2.5 years ago, we were 15 employees at the company. Right now we're 105, which is still a low number. So we're very efficient. But what I'm trying to say is that we probably have one person in the company that's been here for 5 years. Then everybody else just joined in the past 2-3 years. I started this company with two other co-founders. They're no longer here. Sometimes when companies, grow, scale, you need to adapt. You need a different skill set. Those two co-founders are good friends of mine, so everything was done amicably. But when a company grows hundreds of percents year over year, it requires people to be extremely agile, extremely talented, extremely adaptive,
Humble.
and humble too. So I feel very fortunate to having had the opportunity and still having the opportunity of working alongside people that are exactly that.
So there are things that I look for, and it's, I've been doing this a long time. And I've gone through a lot of different industries, and I've learned some really, really hard lessons, and I still learn lessons today. I mean, there's no doubt about it. I'll be learning. The market will humble me for the rest of my life. I mean, there's just no doubt about that. But I do believe that there are certain things, certain qualities that you look for in companies that it's like building a case, like a lawyer. The more boxes you can check off, the better case, the stronger the case is, right?
Yeah.
And one of those things is, no, the number one thing for me is leadership, right? You can have a great product, you can have a great service. If you don't have a great leader with a great vision and a clear strategy and a team that can help implement that strategy, your odds are stacked against you, right?
It's all about people at the end
It
of the
is
day.
all about people.
Companies
And
are made out of people. So
being able to talk to, and this is what I love about the smaller cap or the lesser known names, because this is where, for a retail investor, your edge really is, because one of these days you're going to become one of those like $100 billion companies, and you're not going to want to talk to me.
I will. I promise I will.
No, that's what happens though, right? You
Yeah.
get to size and scale, and now that company is dictating who can be in on the call, right? It's just
Yeah.
the way it is. It's the way Wall Street works. And you think you got a broken system, man. We don't even want to get started with the Wall Street. I mean, I think that's a broken system that needs to be redone from the bottom up, right? But the bottom line is, it is the people, it is the vision, it's the passion, right? It is, how big is the addressable market? It's a pretty big one.
Yes.
Right? And you're already demonstrating, you're the new kid on the block, and you're demonstrating that there is something there because it's resonating and you're growing, right?
Yeah.
And I really don't see what the downside risk is, because I think you have a great proposition for the agent. I think you're going to go through, and I'm kind of surprised by the churn number, because especially in an environment like this, because you get people that decide they want to be a real estate agent, or they're doing it part-time because, there's just money to be made there.
Yeah.
And then when the market gets tough, they hang up their license, they're done, right?
Right.
So, I mean, that's kind of interesting that you are not seeing at least not yet. You haven't really seen the effect of that, right?
Yeah. Yeah. Not yet. And again,
could that be because they're something more than just them owning a license and hanging it up in an office? They're actually part of something bigger.
And maybe it's because we're, especially in this type of environment, real is the only alternative that really makes sense. And by the way, I will have to jump off to
You got to go
to a meeting with a team that's considering joining us. So I don't want to let them down.
No, that I completely understand. All right, listen, I you got to jump off right this second.
30 seconds. Yeah.
30 seconds. And 30 seconds, I'm just going to say this then. Here's the deal. The chart on this is in a downtrend. It's from the upper left to the lower right.
Yeah.
However, if you can see where that line is drawn, this is a pretty critical area that you are at. The next area of support would be somewhere around let's just call it $1. And that's a round number that everybody worries about, because once you get below $1, if you stay there for 30 days, then you're going to get a delisting notice and all this other stuff.
Yeah.
I would say this, everything that we just talked about, the growth that you just had, if you don't want to buy the stock today because you're worried about the market overall, that's fine. I understand that. I would suggest putting the stock on your watch list. Pay attention to what's happening with the company. Go to their email, sign up for their email alert service, and anytime they file an SEC filing or do a press release, you're going to get it sent directly to your email. That way you don't forget about the company and you watch the progress that's being made. He has to go, but when you have something that maybe an acquisition or whatever, and you feel like, that could be significant, let's have you back and we'll do this again.
Sounds perfect.
All
Thank you
right.
very much for having me today.
Thanks for taking
Okay.
the time. Go to your meeting. Goodbye. Hey there, all you stock market junkies. Thanks for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had Tamir Poleg, CEO of the Real Brokerage, or Real. Ticker symbol REAX. I hope you enjoyed today's interview, and if you did, do us a favor. Give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.